afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 21st of December, and with me, Brian Fernandez, is my co-host, Jeffrey Halley, and our regular guest on Thursdays, David Kuo, founder of the Smart Investor out of Singapore. Gentlemen, welcome to the show.
Selamat hari, Brian. I don't think 2 against 1 is fair, do you?
It's your internet, David. It's so huge. It requires 2 of us just to stand there evenly against you.
You're very kind, but I still don't think it's fair.
Words out of my mouth, basically, that we need to match that intellect. So we need both of us to really kind of do you justice.
You're too kind.
You're
wrong.
How do you get?
You're wrong, but you're still too kind. Yeah.
Well, before we get to David, let's just take a look and see how markets are performing across Asia today. And starting in Kuala Lumpur, we can see the KLCI, the KLSE is down 0.49%. The Shanghai Composite is almost unchanged, up just 0.8%. Down in Sydney, the ASX All Ordinaries is down 0.47%. Japan, the Nikkei 225 is down a whopping 1.7%. In Hong Kong, we're seeing the Hang Seng down 0.39%. And in South Korea, the Kospi is down 0.84%. So, David, can you perhaps tell us about what's going on in the stock markets across Asia today?
Blame it on Wall Street, Jeff. It's all Wall Street's fault. I mean, things were going along swimmingly, wasn't it? I mean, over the last 6 weeks, 5 or 6 weeks, everybody thought they could make money hand over fist. And then suddenly last night, the Dow drops nearly 500 points, well, over 500 points. And the NASDAQ was down and the S&P 500 was down. So we can blame it on that. The other thing we can blame it on is it's a normal Thursday. I mean, as Brian will tell you, Thursday is a down day Thursday. Whenever I come on the show, stock market indices are down. The big exception is when they're actually up. But I think there's a lot of confusion in the market at the moment. And I think we can probably put it down to people not fully understanding what the Federal Reserve is planning to do in 2024. Everyone thinks that interest rate cuts are on the card and that there is no possibility whatsoever of the Federal Reserve wavering. But I think when we have a look at the personal consumption and expenditure index that comes out later on this week, whether or not inflation has been put to bed. And I have my doubts that inflation has actually been cast to one side now. I still think there is inflation in the system, and it doesn't really take an awful lot for inflation to come back. So the other thing we can put it down to, Jeff, is holiday season. I think
it's profit taking as well, isn't it? Everyone's made a lot of money. Maybe it's time to, there's a lot of thinking around, let's lock in, we've had a good year. The NASDAQ and the Dow have gone up tremendously this year. Let's lock in some profits.
I mean, if you were a fund manager, wouldn't you do exactly the same? You've had a pretty good year, particularly if you have been invested in US stocks, and you think, well, I only have another 5 or 6 days before I need to close my books and deliver my report card to investors. So why take a risk? It's a bit like if you were 3-0 up in a football match, why would you want to take a risk? Why would you want to throw on your strikers? You might as well just sort of keep the ball and just run down the clock. And I think that's generally what's happening. And so consequently, because I think there is going to be an absence of the professional money managers in the market, because either they've all gone on holiday, it means that there is going to be increased volatility. It won't take an awful lot for stock prices to either jump or to actually drop. And so volatility is one, misunderstanding the Federal Reserve is another, and probably the third one is that the fund managers have all gone on holiday already.
Now, David, I want to ask you a question about a specific stock, the fast fashion Chinese brand Shein. Very interesting. They're about to, IPO in the US. But is there a possibility, perhaps, that regulators may then derail its IPO?
I mean, just to give people who are not familiar with high fashion, such as myself, why Shein is interesting. It is because they produce very cheap clothing that appeals to this disposable age that we're in. So people like my daughter and a lot of other people will go onto Shein and go, oh, that outfit looks quite cheap. What is it? It's only about $10 or $12. Let's go and buy it. And as a result of that, Shein has probably disrupted the fashion industry to a great extent. It's disrupted companies like Zara. It's disrupted companies in the UK like Primark that prides itself on being able to produce very cheap clothing. And Shein is now worth around what, sort of 80 or 90 billion US dollars. And up until now, it hasn't been listed on the stock market. But there are rumors that it has filed confidentially a plan to list on the US stock market sometime next year. Now, people are a little bit concerned about Shein on two fronts. The first one is, why are its goods so cheap and so much cheaper than anyone else? Are they making use of cheap labor in that part of China that nobody really wants to talk about? Are they actually sort of using the cotton from that area in order to make the clothes? And if so, are they ethical and are they sustainable? That's question number one. Number two is that they have a massive database of customers from around the world, not just in the US, but certainly in Europe and over here in Asia. So they have this massive database. And the House Committee is focusing on the privacy of data. Is that data totally private? Where is it kept? And does the Chinese Communist Party have access to this data? If Shein is unable to answer these two questions, number one, why is its stuff so cheap? And is it being produced ethically? And number two, how safe is the data that it is collecting? Quite interesting, Brian. They've moved their global headquarters to Singapore, of all places. So it's no longer a Chinese headquartered company, even though it was founded in China and everything goes on in China, but it's headquartered in Singapore. And so questions have to be asked about, are they trying to skirt around the rules slightly? And will the IPO even go ahead next year if a lot of questions are being asked about this company, Brian?
It's very interesting, this one, and I don't think that this will be the last company that finds itself in this situation going forward from mainland China. I mean, we even saw, I think it's VinFast, the Vietnamese electric vehicle manufacturer. They've moved their headquarters to Singapore as well. So there's definitely a little trend going on there. Let's turn to a subject that's always close to your heart, David, which is Malaysia. And I wanted to ask you about what is behind the recent rally in the rubber glove manufacturers over there.
Am I so transparent that I love Malaysia?
Absolutely.
I know.
You're such an exceptional investor. A lot of investors are very skeptical of Malaysia, even though it's a very good story.
It is a very good story.
Yeah.
Okay.
Go ahead.
So back to the glove makers. The glove makers had their heyday during the pandemic simply because what they produced, that personal protection equipment, the PPE equipment, was in huge demand. And as a result of that, we saw companies, not just Top Glove, but things like Hartelager and all the other, Supermax is another one, all these glove manufacturers being in massive demand. And people were just piling into the stock, sending shares in many of these companies up to the stratosphere. And then they came down with a bump when the pandemic was put behind us. And many of these companies probably overexpanded and they overproduced. And they produced a lot of stock that was sold to not just hospitals. Some of these companies produce rubber gloves that are used in the electronics industry because they are very specialist gloves that don't discharge static electricity. I mean, the last thing you want is to touch a chip and suddenly find you've fried it from static electricity. And so now it's actually sort of coming back down to normal again. But people are turning to these rubber glove manufacturers, some of which have been producing massive losses over the last couple of years because of that overproduction. And they're starting to look and say, is there any value in these businesses? And we heard yesterday from Top Glove, which reported its first quarter earnings. And yes, it is still making losses, but the losses are much, much smaller than they were a year ago, and definitely smaller than a quarter ago. So the sales are coming back, and I think the raw material prices are beginning to stabilize a little. And in the case of Top Glove, I think it'll probably take, not just Top Glove, but the other glove manufacturers, I think it'll probably take them a few more quarters before they actually sort of stabilize completely and they start generating profits. And as an investor in Top Glove, I'll probably have to wait until the end of 2024 before I actually see any of that lovely stuff we call dividends, Jeff.
I knew that word was coming. I knew that word was coming. It goes so beautifully with Malaysia, doesn't it? Dividend.
Oh yeah, it is a haven for dividend investors. I mean, the yield on on Malaysian stocks is so high, and there are even some Japanese companies that are listed in Malaysia, and even they deliver extraordinary dividends for investors. So Panasonic is one, Ajinomoto is another. So there are lots of beautiful companies in Malaysia. That's why I love it so much.
Now, on that note, David, thank you very much for your insights. Thanks for coming on the show.
You're welcome. Thank you. And you,
Now,
Jeff.
we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez.
And I'm Jeffrey Halley.
And this interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.